Hi guys, and welcome to another video. Hope you guys are doing okay today. My name is Andrew, and today we're going to be touching base on some more economic data. We're going to be talking about continuous jobless claims, what that kind of means for the broader economy. We're going to touch base on the federal funds rate and what it means for you as an individual. I know sometimes when people talk about it, you don't really know what it means, and if you don't know what it means or how it actually affects your money, it just sounds like a number. We're going to get into a little bit of what the Japanese bank did back in the late 80s and early 90s and how they got into their markets and what it did for the long run of their economy. We will touch base on some stimulus and bankruptcies and kind of end the video there. I don't want this video to be quite as long as the last one. I did write about a 3.5-page script on the last one and try to read it, but the more I rewatched my video, it just felt a little bit too scripted. I just didn't feel like my natural self, and it felt kind of zombified, and I don't want that to be the case. I want this to be more of a platform where I share my honest opinion, and you kind of hear it from me from how I see it in the moment. I do a lot of research, and I want to share that knowledge, and I feel like writing it down is not a bad thing. I want this to feel more like a stronger conversation and less of me ranting at people and telling them information that I know. So with that, let's just kind of get into it. So let's start out with continuous jobless claims. So right now we're sitting at about 21 million people week over week applying for unemployment, which is a slight downtick from where we peaked out at about 25 million people, which is good. It's kind of expected. When we're looking at the economy, we're seeing that people are going back to work, states are opening back up. We should expect this number to go down. I think it's important for us to pay attention to it because this will give us a real understanding of how many people are actually lost their job because of unemployment, or people who have lost their job because either the business went under or the company had a restructuring and they cut their labor by 30% or whatever the case may be. And we can kind of see what this is going to do for the economy, and it'll give us a better understanding of things looking forward. I want to touch base on the federal funds rate. I know there's been a lot of talk out in the markets about how rates are dropping next to zero. We haven't seen this since the last financial crisis. And what does that mean? There's been some talk about the Fed going into negative interest rates and what that would really do for the economy. And I'm going to talk a little bit about Japan afterwards and what their economy did and how going negative affected their growth potential. So for those of you who don't know real quick what the federal funds rate is, it's a rate that the Federal Reserve sets to allow banks to do overnight lending to each other to fill their cash positions. What that really means is banks have to have a specific amount of cash sitting in their accounts, and sometimes due to whatever reason they might come short to that requirement, so they will borrow money from other banks. Well, that bank's not just going to give the money for free, and they look at the federal funds rate and what they're requiring banks to basically charge each other. It's usually something like a one-day loan that they pay off the following morning, so it's never really an issue. The federal funds rate is more than that. It affects every aspect of loans and debts out there. We are a credited market. It will affect your mortgage rate. It will affect your car payment if you have an auto loan. It will affect your credit card payment. Maybe not, but not to a high extent. Credit card debt's not directly tied with the federal funds rate. It will affect it. It should go down, but it's never going to get to any reasonable level. They charge a ridiculous amount of interest, but that's besides the point. But you get the idea. Is that the funds rate, it affects a lot of different aspects of the economy, not just something to do with banks. So Japan is a good example of a country that went into the negative rate territory and never really got out. They had an issue where it wasn't the only issue that caused the economy to kind of stall out, but if you look at the charts, this is about 30 to 32 years or so that their economy has basically done nothing. And it's kind of sad. They've basically flatlined. It's not only because of negative interest rates. I do want to specify that. They have multiple issues. They have a demographic issue where their population is aging and there's no one going into these workforces to fill these jobs. And they have a supply and demand issue when it comes to workers being the demand and the supply being the jobs. And you also had an issue with the Bank of Japan buying into the equities market. So if you don't know, the Federal Reserve here in the United States is not allowed to buy stocks directly. It's just not allowed. We don't allow them to interfere with the market. In Japan, it's a little bit different. The Bank of Japan actually owns about 40% of the entire Japanese market. And it kind of caused their entire economy to kind of stall out and become zombified. Because the bank was pumping so much money in there and willing to buy more and more assets, companies, whether they were good companies or bad companies, a lot of them that were maybe over leveraged or just didn't have enough money in the bank to stay afloat, weren't going out of business and weren't going bankrupt because the bank was buying as much as they could of it to make sure that nothing went under. And we can see the long-term ramifications of that is the markets stall out. They don't move. And you're not going to see that growth that you saw. And it's kind of sad because you wonder what the Japanese market would have done if they would have went through these intense cycles. Moving on, I kind of want to talk a little bit about the stimulus package that was passed in the Senate. A little bit, not the Senate, sorry. It was passed inside of the House of Representatives by the Democrats. It was a $3 trillion called HEROES Act, and the Senate basically came out and said they weren't going to pass the bill. I personally had an opinion that they're going to pass the bill. I think that there's just a lot of push and shove, and they're going to adjust it. There's no way it was going to pass as it stands. And they have said multiple times that they want to wait this virus out before they pump out any more stimulus. Do I think there's going to be more stimulus? Absolutely. How that comes about, I don't know. They've talked about a $450 a week bump to anyone who goes back to work, but the thing is, it doesn't qualify for people who have never stopped working. There's also an issue of people who have lost their job, but now there's no benefit to them because they lost their job and there's nowhere hiring, so where the hell are they going to go? And they're now getting less stimulus. So I don't know exactly what's going to happen when it comes to stimulus, but I can guarantee you there will be another round of some kind of stimulus. How it gets paid out is kind of to be determined. I would hopefully in the next few weeks, we'll get something passed, but only time will really tell. Lastly, one thing I did want to mention too real quick before we go back into the portfolio is these bankruptcies. So this is a list of all the Chapter 11 bankruptcies in 2020. Some of them happened before the coronavirus, some of them happened after, but ideally most of us understand that a good percentage of these are representation of the virus. We see big names in here like JCPenney, Hertz, they're the car rental company. They had roughly 500,000 vehicles that now are probably going to get flooded into the secondary market. So if you're looking to buy a used car, it might be a good time to buy. Other companies like Gold's Gym, we all know they're a famous gym. They're known for, Arnold Schwarzenegger used to work out there. Boy Scouts America, that's actually an interesting one. I didn't know about this one until I pulled this tab up. We've heard about J. Crew, just a bunch of different companies. And the thing is that this is going to continue to happen. I don't know how long it'll happen or the amount, but it's definitely going to continue to soar, and we're probably going to see a huge wave of bankruptcies over the next 3 to 4 months. It's not even just because of the lockdowns. A lot of times, too, companies just have poor balance sheets. They're over leveraged. They owe too much money to the bank. They're not making enough money. The business model basically doesn't work. And so, yeah, the coronavirus could be a definite side effect and could have amplified that, but I don't think that's the direct result. A lot of these companies were companies that were they were on the way out, and we just kind of slowly pushed them out faster. It's not a good thing. It's tragic, and it sucks for all the people who've lost their jobs and individuals who work at these companies, but it's the reality of what's happening. And so I think it's important to just kind of keep update on it. And as this continues to grow, I'll kind of talk more about different companies and different bankruptcies if people are interested. If not, we won't talk about it. That's totally fine. With that, guys, I hope you enjoyed the video. I would appreciate it if you left a comment or a like down below. We'll be going into a longer video format later on this week. We're going to be doing a deep dive into a couple companies that I'm buying this month. And we'll be looking at financial stuff like their balance sheets, talking about the reason I like the business model, where I see the company's going, and all that good stuff. If you are interested, just a heads up, it's going to be coming out. Down in the description, there's going to be some links to some investing platforms that are free to sign up for, and a couple of them, if you sign up and click the link below, you'll get a free stock. I'll get a free stock. If you want to do it, feel free. If not, it's totally fine. And hope to see you guys soon. Cheers.